Good morning. It's Carrie from KDS Insurance Services, and happy Tuesday. I hope you had a really great Labor Day. I don't know about you, but I am so excited that the summer is over. It's probably been the longest summer I've had in a really long time. Just so many challenges. We're in my new beautiful office facility, which took forever, and lots of challenges during this summer physically, and I am just so excited for the fall. It's my favorite time of year, and I think it's because it signals change and it signals time for reflection, and it leads us into the holidays, which is always a really glorious time for everybody. And so today's a great day. It's Tuesday. We've got a short work week this week. But I wanted to talk to you today about life insurance. We touched on this the other day, and we just spoke briefly about how important it is for you to get life insurance and to follow through with the life insurance once you make the decision about getting the life insurance. Because as I mentioned, I've had two specific instances in my career where we've had clients who've decided to get the insurance and then ended up following through, whether it be an application or a payment, and that's just a devastating thing to have to explain to a loved one that the proceeds that they were expecting are not going to come because the process just didn't get completed. So please, if you're at that stage, just pull the trigger. Don't wait. Tomorrow's not guaranteed, and it's important. You made the decision to protect those that you love, so please follow through with that. Call your agent today. Don't waste another day. But talking about life insurance, there's several types of life insurance. There's permanent insurance and term insurance. And the easiest way to understand the difference is term insurance is like renting a house. You are buying a death benefit for a period of time. Normally it's 10, 15, or 20-year terms. Some of them are longer depending on how young you are. And so you're buying that death benefit for that specific term. So if you're 20 and you buy the term for a 30-year policy, that term technically can last you 30 years if you can buy an option that long. So at the end of that 30-year term, the policy would have to change. You would either have to renew it, or you would have to convert it to a permanent plan, or you just don't continue it. The premiums are locked in for the 30-year term, which is great. So when you buy it at 20, you may be paying $20 a month, but 30 years later, you're now 50, and so that premium is going to significantly change at the end of that term. And so one thing to think about term insurance, generally speaking, when you buy a term, you have a conversion policy at the end of it. So in that last year, you have time to be able to convert that policy into another policy, whether it be another term policy, or whether you convert it to a whole life or a universal life. But there's, generally speaking, a conversion option. Now, you will be paying the premiums based upon your current age. You won't continue to be able to pay the premiums that you paid when you originally started the term. And in this example, we're talking 30 years. So when you were a 20-year-old versus a 50-year-old. So something to think about, but it is generally a lot less expensive. It's an easier underwriting process, and it does guarantee that you have those death benefits to protect your life in the event something happens to you, and then those proceeds would then go to your immediate beneficiary, whoever you name in that beneficiary. So that's term insurance. It's a term of time. You're buying a death benefit. At the end of that time, if the policy is still in force, then you can either convert it to a different type of plan, or you can buy another term, and it's all based upon the age at the end of your term, not the original age that you purchased the life insurance. So that's a really important piece of the puzzle to remember, is that at the end of that time frame, you're going to be paying higher premiums because you were older. One nice thing about term insurance, though, at that conversion process, normally you have a guarantee. So if your health has changed in those 30 years and you have some challenges at 50, your policy, because a lot of them do have a conversion guarantee, you do have the right to convert it even if you do have a medical problem. So that's an important piece too, because as we age, things happen, and you could have a significant health change in that 30-year period of time. And if you can continue on with life insurance without being re-underwritten, that can be a pretty substantial obstacle to overcome, especially when you're talking about some pretty big health problems like diabetes, high blood pressure, all of those bad diseases that you get when you're older. You also have a tendency to, when you age, put on weight, and so that can definitely affect your underwriting. So all of those things are taken into consideration, but it is an important piece to find out whether or not you actually have a conversion option in it. That's important. Can't stress that enough, because if you've got a guarantee in 30 years that you can do something with it, regardless of what your health conditions are, that's pretty important. You may not think so now if you're a 20-year-old, but trust me, when you get up into your 50s and you're talking about life insurance, the premiums are significantly different 30 years later. So that's term insurance. The next one is permanent insurance. A lot of people think of this, when they think of permanent insurance, they think of whole life insurance or universal life insurance. Basically what this is a life insurance policy. It's a permanent policy where you grow cash value over time. A term insurance does not grow cash value, by the way. I forgot to mention that. But universal life insurance or whole life insurance does grow cash value, and it is for the lifetime of your life. So when you purchase it, and it's a permanent policy, the plan stays the same, the premium stays the same. It's going to be more expensive because you're growing cash value during the whole lifetime of that policy. So if you buy it at 20, generally speaking, it's going to take you to your death, because it's a permanent plan. You're going to pay the same premiums, and it's going to give you cash back. It's going to give you money back on the money that you've put into the policy. I don't like to talk in similarities to a savings account, because it is not, but it has the similar type of growing your cash value. The policies are set up to where you get a specific percentage on your return, and it's based upon the premiums that you put in, which are stagnant. They stay the same throughout the policy period. That's whole life insurance. A lot of people think of that. A good example of that is Gerber Life. You buy that when you're very young, and it grows cash value. You keep it in, as a grandparent, for example, you buy it for your grandkids, and you keep it and you pay it, and then by the time they get ready to go to school, or they get ready to buy a home or a car, there's some cash value in it that the owner of the policy could technically cash out. So that's permanent life insurance, whole life insurance. The other one of those is called universal life insurance, and it's sort of the same principles, except you have some flexibility with your premium. So you can actually pay more premium into the policy, so you can grow your cash value at a quicker rate. Of course, each policy is going to have some specific guidelines and maximums that you can't exceed. There's lots of regulations that are set up to where you can't overfund these policies, but you do have some flexibility, especially in hardship times, that there's minimums that are set up, so it continues the policy without a lot of times paying the premium. You take a loan out on the policy, but at least the policy stays in place and you have the flexibility. This is called universal life insurance. About 25 years ago, there was a lot of these policies sold. A lot of them now are defunct. They weren't written correctly. So if you do have a universal life insurance policy, and it's about that age bracket, I would definitely get with your agent and ask your agent to take a look at the policy and make sure that it is still a viable policy, that you're still getting cash back, that you're still growing cash value in the policy, and that it's still a working policy. A lot of these policies have gone defunct, and so if you haven't had it checked in a while, I would strongly suggest that you get with your agent and just have them look at the policy and make sure that it's actually a still viable working policy. So there's term insurance, which is just like that. It's a term. You're renting a death benefit. It's generally cheaper. Then you have whole life insurance and universal life insurance. These are permanent policies. They're going to be a little bit higher than a term policy, depending on what age you buy it, of course. And those policies actually will give you some cash back. You will be able to get some interest paid on the money that you put into those policies. So why is life insurance important? Well, obviously the biggest and most important is if you're the insured and you have a life insurance policy on yourself, this means that you're insuring your life in the event that something happens to you and you get killed, or you have cancer, or whatever the circumstances are that leads to your death. And I know it's a very difficult subject, but you've got to talk about it. So you buy a life insurance policy, and those proceeds then go to a beneficiary. Just use me as an example. I have life insurance and my beneficiary is my spouse. And so something happens to me, then my death benefit from my life insurance policies and any cash money in those policies would go directly to my spouse. If something were to happen to both of us, then it would go to the conditionary beneficiary, which is, generally speaking, another family member. That's sort of how at least I set it up. A lot of people do set it up where the benefits go into a trust. That's also a viable option depending on your particular circumstances. So you have a beneficiary, and it's important, especially when you're beginning your life and you're newly married and you have young children. It's really important to make sure that you have a life insurance policy that you can leave to replace your income in the event that you're a two-income household and all of a sudden something happens to you and your income stream is gone. It's important that you leave funds for that spouse and for your family, so one, the family can remain in the home, so there's no more upheaval than there absolutely necessarily needs to be. Obviously, if you've died, that's a huge change your family is going to incur. But by leaving the funds for them to remain in their home, obviously that is a crucial benefit for your remaining loved ones to stay in the home that they're used to. Also, to leave money for kids to go to college. That's another way life insurance is used. I can't stress that enough. Going to college is so expensive these days. I think I read not too long ago, it's like $200,000 for an in-state student in Texas to go to school. That is just crazy. So if you're a spouse and you've got young children, I would definitely recommend that you think about purchasing a policy that will at least give your kids a head start on their college education so they can go to college. And the way to do that is through some life proceeds in the event something happens to you. And then, of course, you also leave those funds for loans and debt. So when you're talking about the calculation to come up with the amount of money you need, normally it's 7 times your income. And that seems like, oh, Carrie, that's a crazy amount of money. Well, think about it, though. If you've got a mortgage, if you've got other debts, if you want to leave money to pay off your house, if you want to leave money for your kids to go to college, and you want to eliminate any debt that there may be, it adds up really quickly. Also, you want to make sure that you have the money to take care of your final expenses, your death, your funeral, your cremation, whatever that may be. But that generally runs about $20,000 for the average funeral and cremation. So that's a big amount of money that you've also got to include in your calculations for your final expenses. So it is a very specific thing, and I do want to stress that when you talk to your agent about life insurance, you need to be talking about all of these things. You need to be talking about your debt. You need to be talking about college education. You need to be talking about paying off all of your debts, your mortgage, your car loans, your student loans, whatever there may be. And then you need to come up with a number that you can, from a budgetary perspective, handle for the premiums. When you're young starting out, term insurance is definitely a great option for you because you can buy a bigger death benefit and the premiums generally are going to be much more affordable for you. Also, another thing to consider is a lot of people have insurance, life insurance through work. But what they don't realize a lot of times is that life insurance does not leave with you when you leave that job. So if you were to change jobs and you had a life insurance policy, generally speaking, 90% of the time, those life insurance policies are not transferable, so you can't take them to your new company. So it's always been my preference to have my life insurance in my control. So I know where I'm getting it and I'm not dependent upon a company to provide it for me. So it will follow me wherever I go and not just with one place of employment. So there's a lot of ins and outs in life insurance. You do need to speak to somebody and get some serious calculations down on a piece of paper. Make sure you're accounting for all those things that you want to account for in the event something happens to you. It is very important, and don't delay. I'm harping on this, but it is so important. I have seen the devastation and the anxiety that it causes when you're expecting there to be funds available and they're not because the process just wasn't completed. We are not guaranteed tomorrow, and it is our responsibility when we have loved ones, if that's your decision to leave funds for your loved ones, to get it done. Don't wait, because you just never know. You don't know what tomorrow's going to bring. None of us know what tomorrow's going to bring. So sit down with your agent. All of the life insurance policies now are done electronically, so you generally have your paramed, which somebody comes out, checks your height, your weight, they take your blood pressure, they take urine, and they take a blood sample, depending on the type of policy that you're buying and your age. That's a big key factor in whether or not you even have to have a paramed. So get with your agent, you and your spouse, or if it's just you as an individual, put it on a piece of paper. Put the numbers down on a piece of paper so you know exactly what you're looking for and the amount of death benefit that you want. It's a great way to ensure that the loved ones in your life are taken care of in the event that something happens to you. It's the most selfless thing, in my opinion, that you can do when you have loved ones. So get with your agent, don't delay, don't just put it off because you just don't know what's going to happen. And of course, just remember, these videos are for your educational purposes only. Please stop for a few minutes and give me a like, a kind, and leave me a comment. Subscribe to my channel. My channel is Carrie Devlin Scroggins, and I'd love to hear from you. I really would. Reach out and let me know if there's a specific subject that you want me to talk about. I'm all about doing that. These videos are for your educational purposes. It is a passion of mine to help insure you so you know exactly what you do or you don't have. And I really hope you have a great rest of the week. It's a short week. I hope it's a great week, and I will catch you in the next video. God bless. Stay safe.